So the good news is if you're a depositor and you're a board that's being charged with earning the most you can, we are in a rising interest rate environment. However, the bad news is that banks are flush with cash right now, and so deposit rates are going to be slow to react to that. They are not going to be as quick to rise as maybe they were in the past. The strategy that I've seen most boards employ is that of laddering. You look at a longer term CD and it has a higher interest rate than a shorter term CD would have. And so you look at the money that you have available. You have to look at the time frame as to when you're going to need access to those funds, and maybe you put some money into a shorter term CD like a 3 or a 6 month, and you'll put some more money into a 1 year, 2 year, 3 year, or even farther out, so at least you can increase your yield. But again, the key is to make sure that you're not putting it in for longer than when you may need access to that money. So just like being in a rising rate environment is great news if you're a depositor, it's not so great news if you're in a situation where you're a homeowner association that needs to borrow and loan rates are increasing. So my advice would be, if there are projects you are looking to undertake and you need a loan to finance those, sooner is better than later. Rates are going to continue to rise. They're forecast to rise probably another 50 to 100 basis points between now and the end of the year. So I would go ahead and apply. So with the cost of building materials, equipment, labor, we're seeing a continued escalation in the cost of getting projects done, whether it's roof replacement, siding, paving materials are tied to the cost of petroleum, and we all know where those costs are these days. And so what we are seeing more often is an association that's considering a project. Maybe they have 10 buildings and they were looking at a loan to finance 5 roof replacements. They may want to talk to the contractor and see what the cost would be to replace the roof on all 10 buildings if it's needed. Perhaps there's economies of scale that can be gained by having the contractor mobilize once, buying material in bulk once, and being able to take advantage of some cost savings there. If the work's going to have to be done anyway in the next couple of years, we all know that that cost is probably not going to go down. We feel like it's very important for community management companies to continue to focus on all of their efforts in cybersecurity. You want to make sure, in order to keep your community association's financial information safe, to keep access to their finances and their funds safe, you want to make sure that you have the appropriate commercial insurance policies to cover cybersecurity issues. You want to make sure that all of your software and equipment is using up-to-date cybersecurity protections, and to make sure that all your employees are following the rules and guidelines so that you can do all that you can to avoid the reputational risk and the heartache that comes with having a cybersecurity attack. With that, we're also seeing a rise in criminals just using good old-fashioned check fraud. You can find YouTube videos that will teach you in 5 minutes how to wash a check. We're seeing increased theft from mailboxes and checks being presented to banks for payees and amounts that weren't issued by the management company. Use daily reconciliation if you're a community management company and your software allows that. As a bank, we do all that we can to try to prevent fraud, but the primary responsibility still rests with the management company to look at that. Also, check into paying your vendors by ACH. That way they get their funds electronically, they're received sooner, and there's no chance of check fraud with that. While I don't think you'll see him again, you can see Gary Woodliff, Diane Cleach, and me at the CAI North Carolina Annual Conference and Expo in Wilmington, August 25th and 26th. We hope to see you there.